Hello and welcome to Fin Business. As part of our knowledge series, we are talking to different banks and getting a perspective on what exactly is happening in banking and fintech sector. Today, we are trying to understand how the Sri Lankan banks are doing. And we have with us Dilshan Rodrigo, the Chief Operating Officer of HNB Bank from Sri Lanka. Dilshan, welcome to Fin Business.
Thank you, Amol. Pleasure to be here.
So first of all, I would like to take an overview how the banking sector in Sri Lanka is, how many banks are there, what kind of market size public sector banks and private sector bank has right now, and what kind of technology evolving there specifically in BFSS sector.
The banking sector plays a dominant role in the overall financial services sector in Sri Lanka. Generally, you would say that the two state banks would account for about 38% of the market share, and that market share has gradually deteriorated over the last 10 years. And the four largest private commercial banks, HNB, Commercial Bank, Sampath Bank and Ceylon Bank, would together account for another 40% of the market share. And the two largest foreign banks, HSBC and Standard Chartered Bank, would account for about 8% market share. So altogether, around about 85% of the market share is held by these 8 banks. So you could say it's almost like a oligopoly. And the balance 15% is held by another 20 institutions, both foreign banks, state regional banks, savings banks and private commercial banks. So and then there you also have the leasing and the financial services sector also that has another 50 banks involved. I would say that from a financial inclusion perspective, about 80% would be the overall financial inclusion. There would be probably about a 20% unbanked population and about another 30% overall underbanked population, which is really the informal economy in the country. And what digitalization offers now is the opportunity to really penetrate the unbanked and the underbanked population. And that is what all the banks are now beginning to embrace. And it's a huge priority on their agenda.
So I would like to take your view specifically on digital, but before that, if you could give us more sense on what kind of growth is happening in banking sector right now, specifically in your country, and also where is the growth coming from? Is it coming from credit side? Is it coming from deposit side?
So the growth has been consistently, a function of the country's GDP growth. And usually you would find that the banking sector would grow in a multiple of 3 to 4 times the GDP growth. So typically in years where GDP growth has been very high, the banking sector has set the pace by growing at the range of, when GDP growth is 7-8%, you will see the banking sector growing at around 25%. When the GDP growth constrains down to say, at the moment it's around 4%, and the banking sector growth is around about 15%. So that has been the correlation, and the growth has been predominantly in activities like construction, infrastructure. The public sector investment tends to be supported mainly by the public sector banks, private sector infrastructure investment in schools, hospitals, education, tourism has been really supported by the private sector banks. So those have been the main areas. Then also the value added exports segment is a very important area across the line, from the large companies, the multinationals that operate in the country, to also the larger middle market corporates operating in the country, and also the SMEs. Now, one of the areas that our bank, HNB, is very passionate about is to open out the digital potential to the SMEs. So tying up with websites like the Alibaba, for instance, where they can actually begin to register and start exporting their produce all over the world, is something that we are supporting them very much on. Even setting up their websites using social media like Facebook to reach out to customers.
Since you say that you're trying different paths with Alibaba and many other fintech companies, I would like to understand, has the market in Sri Lanka evolved to adopt fintechs?
Yes, absolutely. I mean, the challenge initially came from telcos. There are at least 2, 3 telcos now with very good wallet products, and they are constrained by the fact that they don't have that recall or an understanding on the eyes of the consumer as offering a banking product on par with a banking perspective. So banks have a huge opportunity to piggyback on that initial drive to really capitalize with our own wallet products. Then we've also had peer lending, peer-to-peer lending coming through in terms of certain fintechs coming into that foray. Then using effective business to business lending platforms have also come in. So there are lots of fintechs who have come into the payment space, banking space, traditionally banking space, and there are lots also going out of business.
Right.
But the fact that there are so many coming in is creating this interest and this ecosystem around it, and we have no option but to actually also get into that space. So what we have done from the very beginning is not to view this as a threat, but to view it as an opportunity to collaborate. So that is an important initiative for us. And in recent times, we've also had a couple of digital-only banks.
So, do you have digital-only banks in Sri Lanka?
There are 2 companies who have expressed their interest and who are molding themselves along those lines. So, if you take the last 5 years, our investments in branch expansion, our investment in recruitment of entry-level staff has even ATM expansion has been relatively muted. Instead, what we've done is we've invested significantly on the technology side in terms of internet banking, mobile banking, wallet products. That infrastructure has been a significant investment on the digital technology, and also open APIs with our core banking and so on. And in parallel, a lot of effort has also gone in terms of the infrastructure. Centralization initiatives, redefining the role of the branch, outsourcing non-core activities, and we are also engaging with the regulator to drive this momentum because the regulator, like in India, has been very progressive. They are very keen to support these efforts.
So allow me to get some more clarity on the regulator perspective. When you look at fintech, when you look at digital-only banks, you give an example of India. India has recently, the RBI, India's central bank, has already given licenses to 11 banks, small and payment banks. And in a way, RBI is a bit progressive regulator, but still there are a lot of concerns on the fintechs because the regulators all over the world are in a dilemma, whether to support innovation or whether to support the security. Both, tackling both the pillars is going very difficult. How the situation in Sri Lanka is, though you said that the regulators are very supportive, but are there really challenges for regulators to tackle?
I think the regulators' thinking globally comes from their primary focus area, which is financial inclusion and reducing the informal economy or the shadow economy. So if those overarching objectives are achieved, then as a regulator, their goal is nearer. So the fact that they're embracing fintechs or tending to support the non-banks getting into the traditional banking space is only because they feel that alternative model is superior in terms of reaching to the unbanked and the underbanked.
Absolutely.
Now, in any country, you would find that the formal financial sector, which is the banks and the financial leasing companies, finance companies, microfinance institutions, are still a very small fraction of the non-traditional financial sector, which is comprising of the money lenders. And the money lenders are, when we talk in terms of, in Sri Lanka, we talk about banks and the financial sector comprising of probably 70 or 80 institutions. But if you take the informal sector comprising money lenders, you're talking 20,000 institutions. And I'm sure it's that kind of multiple that is in India as well. Lots of, issues that can affect the fabric of the economy. So it is for that reason that you find that the regulators are really shaking up the financial sector to support. So banks should take a cue from that and then collaborate rather than view the fintechs as a threat. So there is a lot of opportunity given the resources that we possess, the loyalty that we have, the brand we have with our customers to embrace the fintechs as a integral part of our own business model and work with them to be able to derive that value in order that the overall hierarchical objective for the regulator and the country is achieved.
What kind of growth do you see in fintechs going ahead if you take a span of 3 to 5 years? Currently, tell me how many fintechs do you have and how many fintechs will be there in next 3 to 5 years, and also what kind of growth, specifically digital growth, that you see in banking space?
I may not have an accurate number for you, but for the 20 odd banks that we have, I would say that there are at least 1,000 fintechs that are operating and about to commence operations. And at the same time, there are also another half of that probably that is also going out of business. And the industry is growing at probably 30%, 40% on the fintech side. So I believe that this is a trend that is going to be there in the future. So I see a good future for banking, not only because of the existence of fintechs, but because of the existence of fintechs, we are being challenged to reinvent and drive our business model to be able to become equally relevant to our customers in terms of being able to do banking transactions. So banking is no longer going to be a place but a lifestyle for customers going forward. So banks need to be able to innovate to be able to make that happen.
So the banks are not going to be a bank but a lifestyle banking going ahead in
Absolutely.
Sri Lanka. That's what your take
Absolutely.
is. Thank you so much, Dilshan Rodrigo.
Thank
you
you.
so much.
Thank
It was
you very
wonderful
much.
talking to you.